Good morning, everybody. I welcome you all for NextGen Chemical and Petrochemical Summit 2021. It is day 2. We had a great day yesterday, and I hope you will also enjoy the deliberations which will happen today. The first session is on specialty chemicals, second on sustainability, third on pharmaceutical, fourth on agrochemical, fifth on NextGen leaders, and sixth on hydrogen. So let me introduce you to the speakers for the specialty chemicals. And the topic is specialty chemicals expanding its horizon. Focus would be on leveraging India's cost advantage by investing in production for exports and meeting local requirements, setting up high growth aspirations, investing in developing Indian market, developing a spatial business model, and preparing for mergers and acquisitions. We have a very eminent panel here, moderated by Mr. Amit Gandhi, Managing Director and Partner, Boston Consulting Group. Let me introduce you to our speakers for specialty chemical session. We have Ms. Vinati Saraf Mutreja. She is the MD and CEO of Vinati Organics Limited. Vinati has been on the management team of Vinati Organics Limited since 2006 and balances the technicals/manufacturing execution with a marketing acumen. She was chosen as the Outstanding Women Business Leader for 2018 by the Economic Times. Then we have the pleasure of Mr. Adnan Ahmad, Vice Chairman and Managing Director, Clariant India. With 37 years of industry experience in leading companies, Adnan brings with him a strong track record of business leadership. He is a member of the CII National Committee on Chemicals and Petrochemicals and a member of the Executive Committee at the Indian Chemical Council. Next, we have Mr. Madhav Prasad Aggarwal, Chief Promoter, Sajjan Group of Companies. He's joining all the way from Germany. It's still early morning for him, but really thank you, sir. Despite the jet lag, you have connected with us. For last 40 plus years as a promoter of Sajjan Group of Companies, Mr. Aggarwal has been the driving force behind the success story of Sajjan India. As a renowned veteran in the chemical industry, he is a recipient of many awards and accolades. We also have the pleasure to welcome Mr. Rahul, who was there in the inaugural session yesterday. Mr. Rahul is the Managing Director, Indian Subcontinent and Polyurethanes India Business, Huntsman Corporation. Rahul is in charge of driving growth strategy in the region through various collaborative initiatives. With over 22 years of leadership experience, Rahul has been instrumental in making businesses more customer-centric, defining strategic priorities, and leveraging digital capabilities. Next, it is my pleasure to welcome Mr. Shohab, Rais, Chief Operating Officer, Indian Chemical Business, Tata Chemicals. With over 33 years of industry experience in diverse fields, Mr. Rais is skilled in negotiation, business planning, strategic planning, business development, and marketing strategy. Earlier, Mr. Rais led sales and marketing of Tata Chemicals for India and Africa. He is an active member of various industry bodies and associations. I would like to now welcome Mr. Yogesh Kalra, Head Global Business Creation, Galaxy Surfactants. Yogesh has been associated with the company since 26 years with a background of chartered and cost accountancy. He started his journey in finance, accounts, information technology, and moved into various processes and roles from supply chain operations to business creation and business development across geographies and SBU head at one of its subsidiaries in US. And let me introduce you to the moderator, Mr. Amit Gandhi, Managing Director and Partner, Boston Consulting Group. Amit Gandhi leads Boston Consulting Group's work in chemicals and agribusiness for India, as well as the firm's work in strategy and value acceleration for the Asia Pacific region. He is a core member of the industrial goods practice with extensive experience in the chemicals, agribusiness, automotive, and steel industry. And everybody knows that you also came out with a very good report, which was jointly published by BCG and ICC. So I would now request Mr. Amit Gandhi to take it over from here. Over to Mr. Amit Gandhi.
Thank you, Praveen. Thank you for the introductions and welcome to all the panelists. Pleasure to be talking to all of you today morning. I want to start by saying the whole discussion around specialty chemicals is something we've been doing for many years now. The growth story is well known. The whole aspect around the attractiveness, valuation, etc. are well known. So what I want to do today, with the permission of everyone on the panel, is actually focus on 2 or 3 specific areas and get your thoughts on what are you really seeing on ground. personal examples and anecdotes from what you've seen in the past, and anything else which you believe the audience could benefit by. So maybe just starting off with our first question, and then we can have a live discussion on this. I think the first one, which I am actually very interested in hearing from all of you, is on the whole China plus one story. It's been in the news for a long time. It's also the flavor of the month in some sense across the board. It's very interesting as a concept. We've heard many things around it. Would love to hear how you, in your day-to-day work, as you're talking to global customers, as you're talking to global partners, what are you really seeing in the conversations? There's obviously a tactical shift of volume which has happened over the last year. It's been a good year for us overall as India. But more structurally, are you seeing chief supply chain officers of global companies starting to reevaluate where the supply is coming from? Are you seeing investment starting to be talked about in India? Would love to hear stories on this. So maybe Vinati, we could start with you, and then we can go across the panel. Would love to hear your thoughts on this one.
Sure. Thanks, Amit. Let me start with our experience first. Our company was started in 91 to make this product called isobutyl benzene, which is the raw material for ibuprofen, the drug. Now, China used to make IBB before India started making it. Along with us, there was another Indian company, today it's SI, that also started making IBB. Then somewhere in early 2000, China exited that business altogether. And us Indian companies started exporting this product, not just to US, UK, but also China. Then our company diversified into a second product called ATBS, which is a specialty monomer, which is used to make water treatment polymers that go into oil recovery and various other industries. Now, China also makes this the same product, but we have 65% market share. The Chinese are unable to compete with us, especially in the US. There's also the US-China trade war, so there are higher tariffs on the Chinese product. ATBS also, the freight is higher, even though it's high from India, it's much higher from China, and we have 3-4 times the capacity of China. So that is our personal experience. Now, even when our customers are looking at other products, now they are first asking their Indian suppliers to invest here. They feel safer. They feel from a longer term perspective, I do think they think India is a better bet. Also, China lately, environment norms are much stricter than in India. Coal prices are high. So given all this, definitely this China plus one story has worked out well for our company, and I see a good future in that for the rest of the industry.
Super. Thanks, Vinati. And it's a lot of what we're also seeing, which is beyond just cost, the reliability, the IP protection, etc., which is driving some of this volume away. Adnan, would love to invite you on this topic. You also have a very different take on how China plus one is panning out beyond just volumes.
Yeah, absolutely. So thank you, Amit. And yes, it's interesting to hear from Vinati, because that's the perspective really when you're manufacturing and you're a really successful Indian company. It's slightly different when you look at MNCs. So, the conversations for MNCs with global customers are happening outside of India, and they're held with the organization in the country of the customer or their head office, not necessarily in India. But the repercussions are very clearly on us. So, we would be talking to our own colleagues, and everybody's trying to grab a piece of the business in their territories. And of course, India is a very attractive opportunity there. So very clearly there is a demand for sourcing products away from China. There's no question about that. So people are looking for a plan B. They don't want to be fully dependent on China, and they want to reduce their dependency from there. But what I see, I don't see a landslide. I see a trickle. And the reason I say that is because China is just so big. And if you just look at I'm looking at chemicals only, chemicals, specialty chemicals, they're 10 times of us in everything. We have 2 to 3% of the global trade in chemicals or manufacturing, and they have 40%. They're just so big. But that's where the opportunity is. So the challenge is that customers, slightly different from what you said, Amit, they want to match cost and service that they get from a well-oiled Chinese supply chain. So, I can't hide where, and Vinati's also said that, I think, that, she's able to compete. So it's not that I can't compete, but just because you want to get out of China, you'll come to me. So we have to get our act together and to be able to compete. We have seen our company is definitely willing to invest in geographies outside of China. But our China strategy is very clear. There's a lot of investment going into China as well. Having said that, just because of the size of it, there's big opportunity for India. We've already seen that. We saw some very attractive investments in our Kadlur plant, where we are the sole suppliers of some very crucial products globally, which is coming only from India. It could have gone to China, but it didn't. We competed for that and we got it. Also, our industrial and consumer specialties business, where we've gone into a joint venture recently with an Indian company for green ethoxylates and so on. That's a big opportunity for us. It's a sizable investment for us as well, and a big commitment of resources coming into India. So this sort of stuff is continuing. I just want to add one more context here that we should look at, certainly for the global MNCs and so on as well, is there is another part about sourcing from India from procurement. Setting up a nice, key procurement team who go out doing business development within India, sourcing engineering equipment and all kinds of other stuff that you need in your specialty chemicals plants anyway, whether it's pumps or valves, whether it's, reactors or anything, because we've got really world-class manufacturers in India for engineering goods as well. So we are beginning to look at buying not just chemicals and so on, but also things that are required to support our chemicals from India, which in the past you would have set this up in China, but now we're beginning to see India as the place that we want to set it up in. So just another perspective there. Back to you.
Brilliant. Thanks, Adnan. I like the phrase, not a landslide, but a trickle. And it's up to us to take that opportunity to build it out. And that's really where the place is. Mr. Aggarwal, maybe switching to you. You're obviously at the forefront of this as well. You're seeing a lot of this from a global growth exports point of view. What are you seeing as the real structural shift coming because of the whole China plus one opportunity beyond tactical volumes moving up and down?
Thank you for that. I would echo a bit of what Vinati and Adnan Sab said. Definitely, there is. It depends on the nature of industry. In chemicals, it's a wide range. So in some, you do see a trickle. In some, we see and already experience kind of a landslide, I would say. Few reasons for that. From our experience in the last couple of decades, engineering innovation has played a very significant role in differentiating Indian companies from a lot of Chinese ones. Don't get me wrong. I mean, some of the Chinese ones are excellent, but if you compare some of the world-class Indian companies, engineering innovation means very good efficiencies in cost versus asset utilization, reduction of expensive chemicals like catalysts. So reuse and stuff like that is a game changer. Reaction optimization in the sense of playing between the dynamics of pressure, temperature, etc. And also continuous reactions instead of the batch size. So all these, I think Indians are good innovators. Chinese are very good at huge volumes, but for innovation, especially engineering innovations, R&D, and some of the sustainable practices, I think we have a great benefit. And more particularly, the Indian government has been very sensitive about the environment right since 1995, if my memory serves me right. So we have been gradually geared up to meet world-class EHS standards. I'm hearing some disturbances. Am I being heard? Are we okay?
We can hear you well.
Okay, all right. So Indian industry, especially in the specialty area, has been very well geared up since in the last 25 years. A classic example, I mean, I can speak a bit about our own company. As Vinati ji said, same experience here. We have been able to outclass some of the Chinese competition, whereby we are the sole producer or only one of the two producer in the world of certain range of specialty chemicals. Also with EU has this REACH legislation, as we all know. So with some of the expected REACH-like newer legislations coming up in different parts of the world, I think they will have more entry barriers, and Indian companies can take great advantage of this. Also, Chinese companies are not the best, as far as I understand, for production of involving products steps, multiple steps. Up to 6 or 7 steps is fine, but Indian companies are exceedingly doing well in molecules involving 13 to 14 steps as well. So they are by and large good for the bulk, and we could dominate for the high value, lower volume specialties clearly. Over to you.
Super. Thanks, Aggarwal. It's interesting what you said on the relative priorities. I actually want to switch to Yogesh, who would have seen the opposite side, Mr. Aggarwal, of what you have been doing on your products. Yogesh, from your point of view and how your company has been looking at this, how do you look at the whole China plus one angle, and how much do you actually see it being played out?
Thanks a lot, Amit. Interesting perspective shared by the panel out here. In fact, we have been witnessing this China's plus one situation for quite some time. In fact, it started some 7-8 years back when they were relocating their facilities from chemical parks from urban to rural. Subsequently, they had a financial challenges also. And of course, in 2018, there were a lot of issues on trade conflicts. So all these things are getting culminated from trade conflicts, and sustainability has become the imperative. Today, globally, wherever you go, if you know, sustainability was a buzzword some years back, but today it means absolutely important. And for our organization, Galaxy, sustainability started 10 years back. A decade ago, we started emphasizing, our theme was, we know if you want to grow over a period of time in next 20 years, 30 years, 40 years, if you have to be there, the whole theme revolves around sustainability. And the best thing which an organization did was to embrace sustainability a decade ago. And from there, the entire thing revolved around from sustainability to the second aspect was safety, extremely important. Sustainability comes as safety. Post safety, we said we should focus more on innovation. And there where we evolved from a basic surfactant organization to high-end surfactants into a specialty surfactants, into mild surfactants. So we knew at some point of time, things will open up, things will change. And definitely COVID-19 eruption started giving opportunities. Post-COVID, you had this global supply chain issues. And of recently, you talk about power problems. So all these started culminating, and backdrop of it, we were preparing ourselves in our own way to create our inherent strengths. So as an organization, Galaxy has been creating inherent strengths in terms of innovation, in terms of talent, in terms of patent. These are the 3 important pillars on which we feel the entire business of specialty chemicals, we move around. Because talent and patent is extremely important, and that's where we stand out. And that's what we saw when we started engaging with customers for quite some time, overseas customers more so. They were very clear. They were looking at opportunities or things outside China also. Of course, the ratio would be different. Initially, it would be 80-20, then 60-40, 50-50. Gradually, we are seeing the shift moving towards India. We definitely see that on the demand side. On the macroeconomic factors, I'm talking more from the demand side of it. Of course, there will be a lot of structural issues. As rightly said by Mr. Adnan, the size and the scale of the Chinese plants are huge, significant, but that does not deter us in terms of creating our own niches. And that's where we saw the demand side pulling more and more the organization, the global organization. When you work with the global world, you need to focus first on sustainability. If you are on sustainability, if you are on safety, if you are on innovation, then you're globally present. And exactly that happened with the organization like Galaxy. We entered into significant very mild surfactants. Today, we are the leading players in our country in terms of mild surfactants, also very top player globally in terms of mild surfactants. And that's how it attracted us. And today, our presence in our terms specialty chemicals is in more than 75 countries globally. That's where we started creating our inroads appropriately. Having said that, what are the important factors which we see in India, which needs more strength vis-a-vis China is the building block chain, building block value chain. The most important thrust, India should be self-sufficient in terms of the raw materials. That's where something, if we are able to do there, then of course, over a decade or so, we can take on big giants. So that's what one important building block is the feedstock. which really decides the way you may be good in everything, but then if you're dependent on feedstock, that becomes a challenge. Having said that, another important aspect which we really see good happening in our country, and the government has been committing and investing in infrastructure, extremely important, where Vinati spoke about the roads, the railway corridors, ports, and we do see government fund coming on those fronts and accelerating. And last but not the least, we need to move faster on environment clearances as well as the incentive schemes. Coupled with all these things, as an organization, we have been investing significantly in CapExes. In the last 3 years, we invested a significant amount of CapExes, and we continue to invest significant amount of CapExes in this line of activities. And we definitely do see a positive edge in terms of our mild surfactants, which has really found ways across the globe with an emphasis on green chemistry, extremely important, which is patented, and that's how sustainable also. So that's where we have played our way through the global market and got connected with the global countries as well as the global customers.
Thanks, Yogesh. That was very helpful. I think one thing which is very clear, which obviously is a challenge across the board, is both for industry participants and policymakers. There's nothing called the chemicals industry. Every value chain is so distinct, and as you go more specialty, just as you saw on the panel just now, every participant has a very different view of this, right? So think of this as the elephant and the blind men who are looking at it. You can only see some small parts of it. And that's where a lot of the challenge comes in terms of building blocks, in terms of policy, which can really be directed and focused here, because as a country, we're also growing, right? I want to take that point up and switch to Rahul and Shohab and get their points of view. Yogesh, you talked a lot about the sustainability angle. As we do a lot more of China plus one, as we get more integrated into global supply chains, there will be a significant push from global customers on our ESG agenda as individual companies, and particularly the E part of the ESG, considering how important climate change is here. And Rahul, you will have a very specific point of view on this also, since you can see both sides of the coin in some sense. Would love to hear your thoughts on how should Indian companies think about the E part of ESG, because currently investors in India are not pushing so much on it, but it eventually will happen. And as global companies start to procure a lot more from India, invest a lot more into India, are there, if you had almost like a magic wand, is there one thing you would do on the ESG agenda for India, or you would wish for it to happen overnight?
Thank you, Amit. Before I start, I have to also make a short disclaimer, because I tend to have a personal bias on environment side of the chemical industry, and therefore my views sometimes may be extremely skewed in one direction, but take that with a pinch of salt. So from my perspective, I think as we move into a global marketplace, essentially from the supply chain perspective, and it's already been spoken about, specialty, focusing on what we want to do, innovate, differentiate. I guess the world-class manufacturing standards that we are talking about now, they have to be equated, not only from the manufacturing perspective, but also from the product stewardship perspective. And the industry, therefore, must pursue portfolio upgradation largely on a few counts. And one of it should be adapting new global regulations. And we should not consider them as a threat of cost inflators. Because we've already discussed about volume versus specialty here, right? I mean, there will be economies, countries which will ship those bulk volumes by virtue of cost. And that game for us is not the one which we are probably playing. We are looking at specialty moving out of India. So when we look at specialty, then the equation has to be also based on what is the global expectation as far as the products are concerned. And so one is on the product side. The other operational element of it is making environmental goals, I would say a KPI, operationalize them across the entire value chain, looking at carbon footprint reduction programs as a principle of circularity, and also tracking the ESG metrics in the entire chemical value chain. I think it is going to anyways become mandatory in future. And if we are prepared for it now, it will help us in the larger scheme of things. And there's one specific point which actually government is also driving now. We know this, that's the REACH adaptation in India. It started. It is going to touch us or hit us very fast. And I still remember when I was managing a part of the portfolio in my previous tenure, I know how difficult it was even for a developed market like Europe to adapt reach. It became very difficult initially. And I think we need to pick up and learn from those best practices and start getting prepared. And this is also going to be a significant value driver, in my opinion, if we are able to kind of not create our own reach, but largely adapt best practices from what are existing in the world, so that the equation of principles and the product exports moving out of India are also at the same level. The last one, I think, is on the environmental regulation. I think we should not consider it as a burden. And this was already mentioned by Yogesh ji also, but it should be an opportunity to innovate, right? I can give you an example. Within Huntsman, we have developed a product which is called Miralon now. And that, I believe, will drive a lot around innovation, around an opportunity that we can target. So what exactly is Miralon? It's essentially a process that breaks down methane into a versatile carbon structure, which is then can be used in construction, transportation industry. It's as tough as the toughest steel can get. And when NASA was sending this spacecraft, the sheets that were actually produced from Miralon. So what we've done here is we have kind of tried to capture that output that goes out into the air to convert it into a product. And these are the opportunities, in my opinion, they are going to be even more meaningful in coming days. And we should stay open and try to capture anything that comes our way as far as environmental goals and also converting that in opportunities concerned.
Thanks, Rahul. I think the whole reach part certainly is very important, but I like the part you talked about the ESG, the KPIs, and the reporting. As you're seeing, reporting standards for public companies in more developed markets being very, very strict around ESG. Investors starting to move capital away from that. That is eventually going to happen in India, that we know. The pressure is not on right now, but what we're hearing across the board, you can't wait for 4 years for the pressure to come in, because by that time it's too late. You actually have to start investing ahead of the curve on this. It's a good time when margins are better to actually invest rather than under pressure. So I like that point. Shohab, would love to hear your perspective on exactly this. How are you seeing it playing out from your point of view?
Thanks, Amit. And both you and Rahul touched about ESG metrics and them becoming mandatory. So over a period of last about 10 years, we have already started reporting them in our integrated annual reports. So most of the metrics we are doing, and we are adding up as we go year by year as to which are important metrics our customers and other stakeholders need to know. So we have started, and you can see many companies have already started reporting them voluntarily, despite there being no regulatory compliance requirement for this. And now focusing on E of ESG, what we talked about, Amit. Yes, there would be many actions that companies will be taking, including structural changes. To my mind, all companies will do this, although speed and timing may change and may vary from company to company, but eventually everybody will be doing there, everybody will be there. Companies that embark upon this journey earlier would have advantage of being already there much before or well before regulations or compulsions from customers and markets necessitate them to be there. So they will have that advantage, and they would have already seen the journey, and they would have already possibly done some specialization or some skill development on these things. For global markets and for global organizations within a market, increasingly they are seeking actions on supply chain partners, specifically on carbon neutrality, sustainable practices, certifications, supply chain areas, renewable raw materials, reliance on principles of circular economy, etc. is being looked at by many global organizations from their suppliers also. And the companies also are looking at it. There are various certifications people have started asking for, like Rainforest Alliances, Tropical Forest Alliances, RSPO, CORE, etc. There are many certifications people are asking. In Tata Chemicals, we have recently signed SBTi agreement, whereby we have committed to reduce our carbon emission by 30% by about 2030. And this is in absolute terms. So as we grow, the potential carbon emission will go up, but we will be reducing in absolute terms by 30%. So that's a very aggressive and proactive commitment we have already made. We have made public announcements also about it. There are various projects we'll be working, whether we move to renewables, whether we move to gas, whether we move to biomass fuel, various areas we are looking at and currently evaluating as to how and when we're doing this. So that's an area we are working on. We are also using a lot of solid waste for sustainability. It's not only carbon; it's also like circular economy. What is it that you are doing to ensure that not many resources are depleted, and we are using a product of one raw waste of one company or one product within a company is used as a raw material for another product of the same company or another company. So we are using soda ash waste into manufacturing of cement, and that's the unique plant across the globe. There's only one cement company in the world which is using this raw material, and it's very much envied upon, including some of the Chinese players. They wanted to understand and come here and study what is it that we are doing here. We are also using plastic waste oil, etc., as fuel for our cement manufacturing facilities, because that's what is they are allowed by authorities. We are currently, as we speak, working on developing 2 new products which will be using 100% waste. So, and there'll be specialty chemicals. We are at a very advanced stage. So we are working in this direction, and that's the area I think which increasingly will be focused upon by most of the organization. That's back to you, Amit.
Thanks, Shohab. I think that's exactly what we were looking for. I think the one interesting point that you did mention is a lot of organizations, particularly the larger organizations, are already making moves. Adnan, I want to bring you back in here. I know you're personally passionate about the whole environmental topic, and we've had a few discussions around that as well. The challenge with India is that the current cost structure that we are, the current company sizes that we are, the current growth rate that we are, environment is easy to be missed out in the near term. So if you had this magic wand for India and you could do one big thing or 2 big things, which could really change a trajectory here, what would your wish list be on this? Adnan, we can't hear you.
I'm on mute, that's why, sorry. So I think that's the most used phrase in the last 18 months, that you're on mute. That's one of the things we've learned. Anyway, sorry about that. So Amit, that's a really, really good question that you're asking. And it's a very difficult one to deal with, because it is, I don't know whether I'd use the word cultural, but it's a, it's something that requires a strategic shift in the way that we look at our industry. And it's not just the chemical industry, it's just manufacturing in general, where the environment, sustainability and stuff like that. I mean, I heard Mr. Kalra speak. I was very impressed by what he said. Shohab is talking about SBTI as well. And of course, Rahul has, very strong passion for this. So the one thing we need is all the leaders need to be completely committed to this, to understand that environmental issues and so on, it's the cost of doing business. It's a basic cost of doing business. You cannot do business by ignoring this and saying, I'm too small. I'll give you an example, and I've used this example before. Would you fly on an airline which says, look, I'm not big enough to provide the safety, so you might just crash, right? Because I'm not a big airline, so you got to let me get away with that. I don't think it's acceptable. And the same way, you can't say that because my industry is a bit smaller, my company is a bit small, I can't invest in environment. It's not acceptable. So this is a binary thing. Either you do it or you don't come into this industry. And let me just say that there are some things we have to look at. When we look at sustainability, environment, and so on, you must have a longer term view of your business. It cannot be a quarter to quarter thing. So my investment in sustainability, is it giving me returns this quarter, next quarter? No, you don't look at it like that. It is actually the survival of your business. Are you going to be there or not? And it's very closely linked to your first conversation about China. If India were able to demonstrate globally tremendous responsibility in the environment and sustainability, more and more investments would automatically come towards us. So, and the reverse is also true. If we are not able to do that, then, people may say, yeah, China plus one, but I don't want to go to a country where they just have no respect for sustainability and so on. But we are showing from Indian companies, Tata Chemicals just talked about it. I mean, Yogesh talked about it, that there is a tremendous commitment towards this. And we need to look at what is happening globally. Europe is saying they will be the first continent that by 2050 will be carbon neutral. How are they going to do that? They're going to put a carbon tax. So if you want to do business with them, they're going to look at how you're doing your business as well. It's not just the product that you're giving them. So if you're talking about green chemistry and so on, you will become more competitive than if you don't have that. So these are things we need to look at. If you look at sustainability as a whole, you have scope 1, scope 2, and scope 3 emissions in sustainability, where scope 1 and scope 2 are lower but more in your control, and scope 3 is very difficult. Yeah, that's the stuff about everything that's happening outside of your company but connected with like your procurement and so on. And Clariant itself has committed ambitious emission reduction targets in our operations in supply chain between 2019 and 2030, and we're talking about a 40% absolute reduction in scope 1 and scope 2 greenhouse gas emissions. 40% reduction. And we're also talking about 14% absolute reduction in scope 3 greenhouse gas emissions, from purchased goods and services. So there are all kinds of things like this that I would say that more and more Indian companies need to join the SBTi, which is again what Shohab talked about, which is science-based target initiatives. We need to join this. We need to make commitments. And the commitments have to be long-term, I think 10 years and beyond, so 2030 and beyond, and make commitments publicly. Start small, and then, you can become more and more ambitious. In Clariant, for example, we have a technology now, which is called Sun Liquid, which enables you to produce 2G bioethanol. So you can take waste from agriculture and convert it into ethanol. You're taking a waste and you convert it into ethanol, which I think government of India is talking about 20% bioethanol in our fuels. But that 20% bioethanol has to be made in India. We don't have capacity right now. People are putting in capacity quickly, but they're using 1G ethanol. They're using grains. So that is going to compete with the food chain. We need to look at something that's more sustainable, like our 2G technology, which looks at agricultural waste. Now, it may be more expensive in capex, but in the long term, it's going to pay off. So if there's one thing I would look for is more of the commitment that I see on this panel. I'd like to see it more across, our industry, amongst the CEOs across our industry, more commitment in that area, making the commitments on SBTi and joining the SBTi, making those commitments on scope 1, scope 2, and scope 3, and to just take sustainability and the environment as the cost of doing our business and not as a burden. I think that's what I would leave you with. So a lot of things I've said there, Amit, but I hope it captures what you asked.
Your magic wand is a lot of magic in it right now for the amount of things you've asked, but I love it. I think that's exactly what the ambition level we will need to do. I'm going to switch gears exactly on your last point, Adnan, and get back to the demand side. I think last year obviously has been a lot about exports, the profitability, the growth, the valuations have been really, really strong on that side. The reality is longer term, just as we discussed ESG, longer term domestic demand will have to be a strong driver of growth as well. We see very few companies worldwide who don't have a large domestic base to build off and then build it off exports. Obviously, the challenge has been that a lot of the domestic demand has been at the lower end of the chemical spectrum and not really at the higher end of specialty chemicals, both driven by how much innovation or the innovator level is happening in India, as well as the price points. So we'd love to get thoughts from the panel of how do we see the next 5 years on this specific area. Forget about the current COVID-19 and all of the demand disruption that there is. But if you look at the next 5 years, what can we do as the industry? And what, if anything, would be your wish to start changing some of the trajectory and getting some of the higher end chemicals there? Maybe Vinati, we can start with you on this one. We'd love to hear your thoughts on domestic demand and what can be done to drive more specialty, higher valuation demand here in India.
Yeah, Amit, you're right. Actually, being a specialty chemical manufacturer, 75% of our revenues come from exports. And, our customers like Dow Chemicals or BASF, they make polymers or value-added products, and then those products are imported back into our country. So just because those products require very high level of innovation. So we definitely need to work on our R&D spend as a country, and that will drive demand for these specialty chemicals going forward. Another area where I see is a lot of, for example, pharma companies that are dependent on some specialty chemicals which are being imported from China. Now that can be shifted and start being manufactured in India, and of course, government has introduced a few PLI schemes, so that will also drive up. I mean, the demand is already there. In fact, it's up to us whether we capture the market from China, and there's definitely scope there. So in a nutshell, we are looking at a public-private partnership, with investments in R&D, infrastructure. Keeping all this in mind, we can definitely drive up domestic demand.
Brilliant. Rahul, if I could invite you on the opposite side of the spectrum, very different kind of chemicals that you deal with. How do you see that panning out and what can drive this?
So Amit, actually, it's very interesting because there are two sides of this coin, as you rightly mentioned. One is if you look at our existing environment with the chemical industry, I think a strong double-digit growth is certain, right? I mean, this is not something which will not happen. It's driven largely by consumption traction, young middle class with better disposable income, stronger spending patterns that we are seeing. People are moving from, especially millennials, from spending versus saving behaviors. Those are changing, right? I mean, against that conventional wisdom. So we don't need a stellar effort largely to drive growth. Huh? I mean, if you're talking about 12, 15%, it's going to happen. Huh? So if our play as a company is to continue serving the markets with lowest cost to price value propositions, of course, we can bundle it with great service, unregulated credit, then the customer is there, right? But I think the bad news there is that it is not sustainable in mid to long term from my view. Huh? And I'll explain that in a while. The second part of the story is now if we move to premiumization, which was largely your question, my view is that the trends that are offering us really great opportunities to upvalue our portfolio in domestic markets as well, and we'll come to exports later. Capturing these opportunities needs a completely different mindset, huh? and also thinking, especially on looking at innovating. I mean, especially for companies like ours, multinationals, local innovations, especially in the markets like India, which in many ways continue to be very, very unique compared to what winning means in West, right? And let me explain this further. I think India has actually witnessed a significant change in the entire value offering proposition itself. So it may be rising affluence, which is largely driving significant change in the consumer buying behavior. And that's still evolving, by the way. But the big part there is if you see the magic that e-commerce has done to all of us, it's unbelievable. And I was just reflecting on it a few weeks ago when we were talking to our colleagues in US. I think e-commerce has disrupted conventional consumption patterns that was largely concentrated around low value to now being a better informed, young, aspiring population, which is actually now willing to pay for that value. And as more and more consumers start becoming better informed, it will lead to better spending patterns. And that will also create a space which will have comfort considerations that can drive premiumization. I mean, you look at, for example, automotive industry over past 10 years, hasn't it evolved? I mean, we're looking at typical small cars and now people are considering SUVs. They may not be big, but the patterns have changed. And also the automotive industries today, they are not looking at just offering a car because the market is heating up so much and people are now looking at offering comfort and features as a given value proposition. And this is completely distinct from what it used to be in past. In past, you just needed one logo on the front and the back of the car, which says that there is a better service network and the mileage is very good. So that car sells, but now it doesn't work that way. So technology disruptions also around e-mobility, I think has opened a level playing field for everyone to upvalue specialties. And just think about it. So my view is the success of e-mobility is not going to be mechanics anymore, which largely was in past, 100 years, but it's actually a significant disruption which is led by chemistry now. Whether it is battery, it is noise reduction material, lightweighting composites, lighter, better quality seats, everything. So if I have to summarize it, I think we should leverage on our incredible intellectual capital, which Vinati already mentioned, largely in research, and find alternate ways of staying relevant and also competitive. Look, I mean, if we can build a real rocket which was hovering around Mars for $70 million, and that I also realized was the cost of a Hollywood movie, Gravity, roughly almost that much. So it's not about frugal innovation itself. It's also about innovation which is driven by the sense of cost and then making us stay relevant. So my personal view is, if we are able to tap such profit pools, it requires persistent hard work. It also requires a lot of patience, investing in innovation, differentiating, thinking ahead of the curve, and creating those solutions today for tomorrow's pressing needs. And I think that will make us not only survive, but thrive beyond next 5 years.
Thank you, Rahul. I think just building on the concept of innovation, Mr. Aggarwal, this is exactly the area where, of course, Sajjan has built up a significant successful business. How do you think about high value specialties as you think about the Indian market? And how do we start to think about building a domestic base which can start to serve what you've successfully built globally?
Right. The way the opportunities are panning out, I think there is just sustainability Indian companies need to address. To give you classic examples, like we are producing a lot of high value specialties. Some of the raw materials, key raw materials, were previously being imported from China. Either the multi-billion-dollar multinationals were themselves providing it out of China. And now it's all because of the China plus one strategy. It's all being started to produce in India itself. So, it's become more of a compulsion. So you don't really need to go and sell the idea. It's just that you have to sell the fact that you are sustainable. You have a decent innovation R&D setup, and things will come automatically.
Interesting. I think the whole concept of patience, innovation, and waiting its turn is certainly the case. But obviously, I'm seeing a very different set of ideas by sector. The polymers one is very different from advanced specialty chemicals, where you're doing a lot of contract synthesis and manufacturing. Of course, it's going to run at different paces here. Shohab, would love to hear your point of view on currently in India, as you see domestic demand progressing. How are you seeing it starting to change a little bit towards the more specialty side? Is there something which you think can help drive it going forward?
Yeah, thanks, Amit. I would like to talk about two vectors which just Vinati and Rahul touched upon. Vinati touched upon exports, where they generate about 75% of revenues from exports. And Rahul talked about our 1.4 billion population and the low per capita consumption of various products, and the enormous consumption potential and a significantly large market that it provides us as we move forward. So I would want to add one more angle to the exports, and that angle would be supporting the exporters of other products, wherein they will consume our specialty products and make a product which is getting exported. And in a while, I'll come there, give some examples from our own stable there. Then coming back, keeping medium to longer term view in mind, which goes to 5 years, 10 years and beyond, companies that focus on scale, innovation, technology, I think would do better. We ourselves at Tata Chemicals are developing specialty products that cater to the changing lifestyle of consumers, with increasing health and beauty consciousness, and also that supports environment protection, because the environment also is continuously getting focused across the global customers base. We at Tata Chemicals have developed few products like FOS, which is fructo oligosaccharides, HDS, which is highly dispersible silica, and nano zinc oxide at our innovation centers. And these are currently being manufactured using our patented technology. HDS silica, which goes into tire manufacturing, actually increases the rolling resistance of the tire, resulting into a very good fuel efficiency for the vehicle which uses those tires, increases tire durability, and also provides better wet grip so that accidents are less. So it also provides a safe driving environment. And increasingly, global car manufacturers are insisting on such tires, and increasingly, tire manufacturers are going and manufacturing these tires. So we are producing this HDS and supplying to tire manufacturers in India, which gets consumed in India and also gets exported outside India. So that's what the point I was making when I was talking about exports and how do we support export through indirect provision of products into export contribution. We have also developed various grades of nano zinc oxide where they have very good antifungal and antimicrobial properties, and they are also high UV protective properties. They go into use of sunscreens where people are taking care of their beauty and skins. They also go into manufacturing of textiles for their antifungal properties and special textiles we are working on. In paints, they are being used. So they protect the structures where paintings are done. We are manufacturing FOS, which we talked about. It improves gut functioning. And all these products are targeting into export markets. So some of these we are looking at more than 90% of the product will go into export markets. Some of this more than 50% will go into export markets. So both domestic consumption and domestic consumption for the manufacturing of products for exports and for exports. I think if we have these platforms, it gives a significantly good market size for us. Thanks.
It'll have to be a combination of all three, is what you're saying. It makes sense. I want to switch gears. Yogesh, you were able to see both the global side and the Indian side in your role quite significantly over multiple years. What would your perspective be on this? What would help drive this for India?
Wonderful question, Amit. In fact, Rahul made a very good opening when he talked about the way the patterns, the things that the trends are changing in our country. In fact, India has always been a growth market since years. But at that point of time, India was growing arithmetically. And now we see in the last couple of years, India is growing geometrically. Geometric progression growth is there. And I would thank this growth to e-commerce, definitely what Rahul touched upon, startup brands. In our line of business, where we cater to the beauty care industry, the home and the personal care industry, where our ingredients go. And we have seen that tremendous growth next to apparels. In fact, the first would be apparels, or then the beauty care, and then the electronics, etc., etc. There have been concepts like D2C, direct to consumers, the startup companies. There are concepts called DIY concepts, do-it-yourself concepts. And a couple of years back, there was a tremendous wave, and it still continues in terms of herbal, natural, Ayurvedic, yogic, organic, you name all those things. And the way it has been taken through. And of course, more so focus has been on wellness, health, hygiene. Subsequently, there have been made in India concept, new trends in color cosmetics. Then you talked about Swachh Bharat Abhiyan, Atmanirbhar plans, then e-payments for all those things, better disposable income, etc., etc. All those things, end of the day, the today's millennium, the today's people are focusing on two things. They want to take care of the environment as well as sustainability. And definitely they are ready to pay that extra price to save the future. Because someone has to save the future. Our ancestors saved the future for us. And it's our job, we hand it over properly to the next generation. And there were rightly said so, we need to invest as a country, as a company, on environment, on sustainability, and definitely there will be a cost involved. There will definitely, there's no issue on that. The countries in India will definitely, the companies in India will definitely invest on those things. They will never shy away. India never shies away from investing on those aspects, and it's a right thing to do. Coming back to our industry, we had invested 10 years back, not today, on sulfate-free technology of mild surfactants, and also on novel preservation solutions. And that's what today we are leveraging in our country on the premium segment on those aspects of it. So definitely these are the molecules, these are the green chemistry molecules. Again, I'll reiterate, these are the patented molecules, these are the sustainable molecules, these are the molecules with better impurity profiles. Gone are the days where people used to talk about chemicals, had this, add this. Today they say, please remove this impurity, please be free from. So that's how the trend has been. And I definitely see in our country, the growth happening. Of course, we require the scale what other countries are there. It may take some time, but I can see that happening definitely. And India is poised to grow, where you all are focusing on global market, which will always be a space for each one of us to play. But definitely our country is on the right trajectory of a growth path. And it will definitely, a matter of time, grow geometrically.
Brilliant. Thanks, Yogesh. It's been a very interesting session across all three areas that we talked about, China plus one, the whole sustainability angle and domestic demand. I'm going to close up the session by asking each panelist if they had a carte blanche on this, what would be one very specific thing they would request or ask for to ensure all the aspects we talked about on specialty chemicals continues for at least the next 5 years? Let's not even think long term. Even if you think the next 5 years, what's the one thing which you say we must do as a country or individual companies? Would love to hear one specific idea. Adnan, we could start with you.
Yeah. Okay. So I'm just going to give a little context and then quickly jump into to answer your question, right? So just bear with me for a minute. So, the fact that India will see demand grow domestically hugely is beyond doubt. I think the key question is how much of that demand can we in India cater to through local manufacture? I think that's the key question. Demand to aayega. There is no doubt, right? Then if you look at some of the things, there's a lot of learning we can get from China, actually, because that's probably one of the most successful companies over the last 3 decades, countries where they've taken people out of poverty, and we've seen various things happening there. So one of the things we see is GDP per capita grows exponentially after it crosses 2,500 USD, right? And you guys consultants, you know all these things better than anybody else, Amit. So, and we are at about 1,800. We may have dipped a little bit, but we are heading towards that. So we need to see that. So one, domestic demand is going to continue to grow. It's going to become exponential after we see GDP per capita grow beyond 2,500. That's the experience of Malaysia. It's the experience of Thailand. It's the experience in China and so forth. And the other thing is that in India, we have manufacturing is only 18% of our GDP. It has to grow beyond 25%. So just keep these 3 things in mind, right? Now we'd ask the question, what is it for the chemical industry? Chemical industry in India needs a plan. Clearly, it needs a plan. China had a plan. They had a plan in 1970, and they implemented that plan, and look at where they are today, right? So let's learn from them. We need a plan. And what is it that we can't continue to depend only on the entrepreneurship of industry leaders in India, which we've done so far. And that entrepreneurship has taken our chemical industry to from where it was to 3% of the global manufacturing. We want that to go from 3 to 10%. So what is the one thing we need? We need a chemical policy from the government of India with a goal to take our industry from 3% of the global supply to 10% of the global supply. And we need to do this sustainably. That's it. Just put together a policy which will help us and keep us sustainably on that growth path to go from 3% to 10%. Not only 5 years, for the next 30 years, it's going to look after us.
So one simple ask, a plan for the next 30 years, which we can implement sustainably. Mr. Aggarwal, your thoughts?
Very simple, sir. I'm not a great fan of subsidies. Every other day you see some subsidies being announced. I don't know how far they are tenable. For me, it's very simple. I'm not a champion at this, but tax benefits. I think that can catalyze investment significantly. So, for example, the government did a fantastic job 2 years ago by announcing this reduction in corporate tax, 25%. I would say simply that if a company is earning, say, 100 crore before tax, 25 crores you pay tax. If you invest, if you have a capex in this year, 10%, for example. So in the following year, you get you should pay less 10 crores in whatever your tax liability is. I think this can give a huge boost to investment, cash flow of the companies, maybe lesser borrowings, and more sustainable. I think it's very simple.
Got it. Tax economics as we're growing, Mr. Aggarwal. Vinati, your one request for this?
Just to add to Mr. Aggarwal's point, the government is sort of doing that by increasing the dividend tax, right? They're kind of forcing you to invest by keeping the dividend tax so high. But anyways, from my side, I think we can invest definitely more in infrastructure. And of course, that can be part of the policy that Mr. Adnan pointed out, but we need more ports, better ports. We need inland water transport systems. We need more industrial zones, SEZs, export, those kind of things. And that's my one ask.
Got it. Rahul?
I completely echo what Adnan mentioned. I think we really need a plan, and especially from the business or the sector that I represent. I guess if our country needs to get into that pole position phenomena, I guess the chemical industry has to emerge as an integrated and differentiated player. And typically, I've heard a lot about chemical clusters setting up. I think it's a step in a great direction. But I think it will yield even better dividends if it is connected by better roads and relatively world-class supply chain infrastructure, to what Vinati mentioned. This is going to catalyze things better. I mean, imagine if you are going somewhere in East and then you want to now connect the upstream product to a downstream industry in North. It can't be taking 20 days or whatever 15 days it has to reach. And I guess the step around Bombay-Delhi corridor is an interesting one, and I think it will catalyze many things. The last thing which Mr. Aggarwal mentioned, I completely echo his thoughts. There are no free lunches in this world, and typically on subsidies, I think it doesn't work that way. If we are looking at PLIs, they have to be focused, because you will always get a lot of flavors of the season, but we need to understand how does this industry move into the next quadrant, and that largely can only happen when we have a focused effort of growing some industries. I mean, if you look at an upstream investment, if there is a public-private partnership to set up some mega cluster, which not only helps one sector, but the large part of that ocean, that's going to help. But it's again a chicken and egg, because we are always waiting for some dividends to be reaped first before we look at investment. And I don't think it is going to go that way. So if there has to be a bold step in any direction, it has to be about some kind of a support in terms of investments from the government, which the entire industry can reap both domestically as well as for export purposes.
Great. Thanks, Rahul. Yogesh?
Yeah, in fact, based on what Adnan rightly shared about a plan, our organized commitment would be based on the plan, invest in continuously innovation, and then scale up with sustainability. All
right. Thanks. That's short and crisp. Shohab, your closing remarks to close us up.
Yeah, thanks. Mr. Adnan talked about manufacturing process, 25% of the GDP. And for this, I think one area that I would want to talk about is scale. Yes, scale of operations. That's the one very, very critical area. This can be achieved through actions from both sides, from corporations and the government. I think corporations could build ambitious plans with commitment of higher capital and building facilities that could be scaled up faster. So you don't have to build facilities today for demand, which will come up 10 years, but which could be scaled up as we move forward. And from government side, I think facilitating faster land acquisitions and faster and very smooth regulatory clearances would go a long way in helping build scale. Thanks.
Great. Thank you all very, very much for the session today. I love the fact that we were not general and we had some specific stories to discuss, so at least the audience also heard more. Just to sum up, look, the specialty chemicals industry, you've heard a lot about it. It is certainly going to grow. There's no question about that. The whole demographic dividend, the affluence levels, etc. Three things we talked about today for the audience also to take away. China plus one is real, but not automatic. So it will require effort, work by us. And it is not a large scale move of volume from China. It is going to start with small volume moves, and which we will have to actually go out and attract investment rather than it coming automatically. Sustainability is important. The E part of ESG is critical, but it will require efforts in advance of potential results. So the discussions we had in terms of quarter result because of my sustainability move might not be the easiest way to measure it, but having KPIs throughout the chain and ensuring that we're looking at it 3-4 years on the line as an industry would be great. Domestic demand is going to happen. We'll just keep pushing for it. And of course, all of the asks at the end, including the plan, the tax structure, etc., would all help on this one. So thank you all again for this, and look forward to catching all of you on the next event. Back to you, Praveen.
There are two questions which have come up, and you still have 10 more minutes.
Okay, let's go.
So you can utilize them. I'm just reading the questions for you, and then you can direct it to the person whom you want. Mr. Ravindran Chandrasekharan is talking about many innovative practices are being followed by Indian companies in areas of carbon footprint reduction, etc. Any initiative to share these practices with other Indian companies to make India as a competitive force? So one is on the carbon footprint. And then there is a question from Mr. Pradeep Pathak, and he is referring to Mr. Aggarwal, where China's strength is in production of bulk chemicals, while India has its strength in complex chemistries, small volume, high value products. But somehow the feeling is that we have not done well to leverage this strength. So over to Mr. Amit Gandhi.
So I think let's start with the second one because it was a specific directed question here. Mr. Aggarwal, your thoughts on that?
Well, a little bit, I would say infrastructure has got to do with some of the challenges the specialty has faced. And I think definitely that is prerogative. I mean, we need to move things quickly, very clearly, and also have multiple solutions. You know, in the past, you had several billion-dollar molecules in different agro or pharma and so on. Now there are smaller ones, 100 to 150 million molecules. You have to cater. So how do you do that? You should have multiple solutions in the same vertical of manufacturing capability. So all these need to be understood and implemented to be able to make meaningful gains there.
Thanks, Aggarwal. Yogesh and Shohab, I'm going to request you to weigh in on the first question, which is the fact that there is a lot of innovation happening on ESG by a lot of companies. Are there initiatives that need to be taken to actually share this across companies, start doing this as an industry more? What would your thoughts be on this, since both of you have been doing a lot of this over the past few years? Yogesh, maybe.
Yeah, sorry.
No,
let's go.
Yeah, in fact, good question on that. On sustainability aspect, one of the areas where we have worked, where we can share and we have been sharing is water stewardship. Another important aspect, which would be an important element, would be how do you take care of one of the most important resource that would be in future is going to be the water, and especially in an industry where water will be essential. And water stewardship is a very important. In fact, we launched our water stewardship program 10 years back in 2010. And today, after 10 years, we have seen the way progress which we have done. We have brought 60% reduction in terms of various aspects. And one of them has been rainwater harvesting. We had all our units in India are zero liquid discharge. And that's where we said we should focus. And that's where we can share across on these aspects of water stewardship on terms of the green chemistry technology, to bring in more and more in terms of sustainability aspects. So this is where I'll focus more, because I feel that water would be another important aspect where the sustainability criteria would play a very significant role.
Shohab, your thoughts?
See, on water, I'll tell you, water is one very critical part. And for us, we currently draw zero blue water from any public sources. We generate all the water that is required for our manufacturing site at Mitapur. And we use some other products, byproduct, when we generate water. So that is one area. And for the communities, we develop rainwater harvesting and various water management systems we are doing in the entire Okamandal area for the community also to be water self-sufficient. So water is one very critical area. Second thing, I talked about carbon. And some of the areas which could, or which we are working on exploring is conversion from fossil fuel to biomass, conversion from coal to gas, going to electric boilers. And when you go to electric boilers using solar and wind energy, which is a renewable energy. And we are also working on carbon capture and capture the carbon, convert it into a product, make a commercial proposition out of the thing. Energy from waste, and alternate technologies for using energy from waste and for new products. That are some of the areas which we are working on.
And Shohab, I think also from the question point of view, do you think there's a way to share these practices with the rest of the industry? How can they access the knowledge that you have and you have built over many years on this?
So I think we are very open to share this. We have already started sharing with some of our global customers, and I'm sure because this is the first year where we have signed the SBTi. When we come with our next integrated report, we will definitely have some of these things getting actually highlighted and written there. And we will be open. Anybody wanting to seek any help in that will be more than willing to share this.
Fantastic.
Amit, just one point to mention about sharing. In fact, from where Shohab talked about, in our industrial zone where we operate from, Navi Mumbai, we had a sessions in terms of calling all the industries in our office and had an exchange program on sustainability and sharing of these aspects. So that has been a regular feature wherever you're based out of in terms of the industry or the unit where you're located. And I think this is a very regular practice that has been happening. And we did that program a year back before the COVID period of inviting our neighboring companies and exchanging the best practices in terms of sustainability aspect, from water to carbon footprint. Thank you.
Fantastic. So maybe there is a way to actually now industrialize this a lot more across all of us so that we can actually get access to this going forward. But thank you both for sharing this. Pravin, back to you.
There is one more, I would say, comment rather than a question. And this is from Mr. Rajendra Khimesra, the Federation of Thai Industries, Chemical Industries Club from Thailand. And his comment is, chemical exporters from Thailand are complaining for registration of chemicals with Bureau of Standards. And it is also a lengthy process. So let me thank moderator, Mr. Amit Gandhi, MD and partner, Boston Consulting Group, to complete the session 3 minutes before. Normally doesn't happen, but when the morning session is on time, it gives us time for other sessions to discuss and elaborate on it. Let me thank our panelists once again, Ms. Vinati Saraf Mutreja, MD and CEO Vinati Organics Limited, Mr. Adnan Ahmad sir, VC and MD Clariant India, Mr. MP Aggarwal ji, Chief of Promoter Sajjan India Limited, Mr. Shohab Rais ji, Chief Operating Officer Indian Chemical Business Tata Chemicals Limited, Mr. Rahul Tikoo ji, MD South Asia Huntsman Corporation, and Mr. Yogesh Kalra ji, Head Global Business Creation, Galaxy Surfactants Limited. So please stay tuned for the next session, which is on chemical industry challenges and solutions. And the speaker is Mr. J. Pani Krishna, Head Operations, Vico Industries Limited. So many thanks to all the speakers and the moderator.